Good afternoon and welcome to this week's market analysis webinar. Hope you guys had a great week, made a lot of money because our analysis has been very, very accurate. So if you have been watching these webinars, you should be making quite a bit of money. Obviously, even if you're not using our strategy, this strategy must have helped you somehow to confirm some of your analysis. So it's been a good week. It's going great. So let's get started. I'm just going to put up my TradingView chart up so we can get started. All right, so before we get started, just for the benefit of those that have not seen it yet, I'm going to keep showing these timestamps so that it can help people who watch the videos on my channel, because you can see all these videos are mostly an hour and a half long, so you do not have to go around looking for chart, not toggling around. So what you do is on the video, go to the show more tab, click on there, and what you will see that is links to each and every pair analyzed during the video. Right, so unfortunately this does not work on a mobile phone, so you're gonna have to use it on a desktop or your laptop. So every pair is linked, so you click on it if you're looking for Euro US dollar, let's say Pound US dollar in this case. Pound US dollar, it takes you straight there. So that's how it works. It works amazingly well. So it's a quick reference assist. It actually helps you to refer quickly, because when I'm doing the analysis and I'm focusing for the next trading session, I always just go back and refer to this. So this works amazing. Works amazing. All right. So let's do it like that. So let's get back to our chart. About the course, our next course starts on the 7th to the 11th of May. So if you're interested in the course and you want to join us, send me an email as per my contact details on the description of this webinar. Okay, so please send me an email, you'll get the details. So even if you're not interested in attending the course now, just send an email so if you can get the information. So when you make a decision, you already have the information. So what we do is the course is the whole course is packaged on a video. So anytime you join, you get that video recording. So you can get started on the videos even before the actual live course. So it is an advantage to register for the course earlier. Then you can get started. You don't have to wait. All right. All right, so I think we've got the formalities out of the way and we can get started. Right. See, somebody says there's no sound on YouTube. All right, so let's get started. So before we start today, I want to show you something interesting. So we were just talking earlier before the webinar started with Ravi saying that he heard that I'm an engineer. I am actually a mechanical engineer by profession. I'm a certified engineer. So I did a lot of maths and physics and all these things. But that is not a guarantee for success in the trading market at all, because it's not just about technicals, it's about the emotions and the psychology of trading as well. So you may be very good technically and lack in the discipline. So your profession or your background does not guarantee success in the trading market. Okay, so I just wanted to share some of the things that I learned that I thought was absolutely useless when I was at varsity and at school. But when I started applying it into my trading and my Elliott Wave analysis, it actually helped me. All right, so what we were doing at varsity or even high school was something like this. If I remember when we did this type of graphs. Let's do it properly. These types of graphs. So I'm just going to spend about 5-10 minutes doing this. Maybe it may help someone. So if you look at this, you remember this type of waves. And if you remember it, please just type it on the chat box. What kind of wave is this? And this will be your time, this will be your length, right? This will be your amplitude, amp, this side. And this is the time cycle. All right. All right, so this is the sine wave. It's still a sine wave even today, right? So, and then you get this one. You get this one, like that, but this one actually looks like this. The cosine wave, right? But if you look at these two waves, that's something that we didn't look at school. If you look at these two waves, if you start measuring your wave from here, you will see that this piece here was making a cosine wave. So it's all about where you start your measurement, because if this continues like this, if you are going to continue with these sine waves onto the new cycle, this is the first cycle here. So your first cycle starts here. Your sine wave cycle ends here. So if it was going to make a new cycle, then it was going to complete this cosine wave that would have been measured from here. So you see, on the same axis, you could have different types of waves, right? You can have different types of waves, and you call it different depending on where it starts. That's what it's all about. Okay, so the cosine and the sine wave is all about where the cycle starts. Okay, but what is really happening with these waves, or with this graph? So you see, the pattern here is that you get a pulse. So in physics terms, we call it a pulse and a disturbance. So in the wave theory, we call it a pulse and a correction. It's just a different terminology saying the same thing. So here you get a pulse, you get a disturbance, and the disturbance brings it back to equilibrium. Okay? So why am I looking at these waves when we're not talking about this kind of waves and we're talking about wave theory? It's because the principle is exactly the same. And a wave is a transfer of energy. It does not make waves. It transfers energy, and the medium moves. And the medium moves, but it doesn't really create the energy. Yes, we all know that energy can neither be created or destroyed. So let's just quickly go through the theory here. So what this is here is the amplitude. So that is the size of a wave. And what you would have here also is let me get a different color. You would have your wavelength. Your wavelength is a measure from, you can call it from trough to trough. Let's do it like that. So this is your wavelength here, which we call lambda. Okay. So I want to bring up a video on YouTube that sums all of this up, this theory up. And then I'm gonna tell you why I'm relating this to the wave theory. So let me get you quickly that video. Okay. Let's clear all that so we can see this video clearly. All right, so here is everything measured up. It's a nice schematic there. So if you look at this point, let's say this is your water. This is water in an ocean. So what is happening here is your water will be, say, moving up and down with a certain amplitude. Amplitude, we're talking about the length. And this length will depend on how much wind there is. Obviously, the less the wind, the amplitude will be smaller. Hence, your waves will be smaller. If the wind is higher, then your waves will move with a much higher amplitude. And how do we measure this? The speed of the wave. So the speed of the wave, if I just play this video quickly before we talk about the speed of. So if you look at this, there's a number of cycles happening at this specific point. On this red ball here, there are a number of cycles going in. So what do I mean by cycle? If it's a sine wave, there's a whole sine waves that goes through this dot per certain time period. So that period, we call it a frequency. So a frequency is a measure of the number of waves that passes a certain point per second. Okay, but if you look at that red dot again, just look at the red dot and how it is moving. You get the red dot again. If you look at the red dot, it's just going up and down. It's going up and down. So the wave is just traveling in there. The medium here is this rope, okay? If you look at the rope is not going anywhere, because if you stop moving that rope, it goes back to equilibrium, which means the waves transfer the medium, energy into the medium without really doing anything, okay? So the energy has been transferred by the rope, but the rope does not do anything, because, so if you see the red dot, it just goes up and down. Energy has been transferred to it by this rope, which is the medium. So nothing really happens. Okay? So the reason why I'm showing you this is that the principle is exactly the same. And if you know anything about Fibonacci, and Fibonacci is also a concept that I studied extensively at school, and I never thought I would apply it. Okay, I'm sure you guys, if you've done any bit of research, you would have seen this picture of the golden spiral, and you see how this golden spiral fits snugly into this famous president's head. Okay, so you can see that it fits snugly there. So it is not the only place. If you go to Google and you check where you can apply the Fibonacci theory, you'll see that it applies in almost every aspect of life. Okay, so similarly here, when we talk about the wave theory, it is exactly the same theory. Only difference is here, you're looking at a pulse, and where we were looking at a disturbance in physics, we're looking at a correction. And all of that gives you your cycle. Okay, so this is just one of the fundamental basics of the wave theory. And I see most people trying to learn the wave theory from the practical application. So what we are doing here with these webinars is an advanced application of the wave theory. So you cannot really grasp the concept if you do not have the basics. And the guys that have attended our course knows that when we start with the basics, it takes us almost the whole week just focusing on the fundamentals, because that's where it should start. So if you don't understand the fundamentals, it will be very hard for you to understand this the right way. You think that you understand, but you're really not applying it correctly, or your interpretation is wrong. Okay, so you need to learn it from the very basics. Okay, so somebody's still saying there's no sound on YouTube, so I'm just going to stop it and carry on here. All right, so let us resume with our analysis. Let's get started. So that was just a bit of an introduction as to, so you can understand the basis of the wave theory. So this has been very well researched and documented. So this is what interests me. As an engineer, and having done a lot of maths and physics and all this mechanical stuff, you've been taught religiously to follow certain formulas and patterns. So this has got a clear definition. That's why it interests me so much. Okay. Good luck, Chumani. We're in the same boat. All right, so let's get started. Let's start with the correlation between Euro-US dollar and the dollar index. So I'm going to take off the labelings first so that we don't clutter the chart. Let's do that. Switch off everything. All right, so I'm on the 4-hour chart. I'm just going to be looking at that correction that we have been looking at since the end of January. So both sides, bottom here, we're going to get the DXY. So the top is Euro-US dollar, bottom is the dollar index. Okay, so we've had this parabolic move. I'm going to show you this move on Euro-US dollar when we go to the Euro-US dollar chart. Okay, and here you had this parabolic move to the downside. And after that, we started this correction. And this correction started with a 3-wave move. This correction also started with a 3-wave move. Okay, after the 3-wave move, we got a correction that was in the same direction as the trend, which is this one here. And we were looking for this one to complete a correction like this. Look how perfect this played out. So for the last 2 months, we have just been looking at this to complete. And you'll see what is happening with this since our last analysis last week. Okay, so similarly, the dollar index has got the exact same structure. Okay, and it has now also completed this last correction that we were looking at. Is this the end of it? So if we're labeling this, I'm gonna just put on the labelings with annotation tools here. We've got our WXY three-wave correction. We've got our WXY, which is a three-wave correction. Why is a WXY a three-wave correction? Is because this is what it looks like. This is 1, this is 2, this is 3. Okay, so this blue correction looks like a zigzag. 1, 2, 3. Another nice zigzag. Very, very nice. Accurate. Right? So we forecasted this when this started this correction. So we knew from here that this was going to go sideways, and we know that it was going to be a deep sideways correction. How do we know? It's because we understand the sequence. We understand the degrees, the sizes of the waves. Okay? So if you do not understand the degrees, you won't be able to focus. All right, so let's go to Euro US dollar. What are we expecting here actually? We were expecting that once this three-wave move completes, we are now gonna get a move to the upside. We are now gonna get a move to the downside. Now the correction is completed. The only thing that will change this move is if you get another X and another Y. But I'm not anticipating this. Another X and another Y for a move down. Okay, but I'm not anticipating this. But if it happens, then we don't disqualify it. We trade what the market gives us. Okay, so let's go to Euro US dollar. Look at it in a bit of detail. I'm going to go back to one chart. So this is Euro US dollar 4 hour, and I've been showing this count for a while now, and this is what I'm looking at. I'm looking at this as a move 1 and a 2, and internally I was looking at this. I'm still looking at this as a 1, 2, 3, 4, 5, and here I am building a 4 and a 5. This is why I expected a deeper wave 4. So this is your 1, this is your 2, this is your 3, this is your 4, and we're expecting just one more move up. Okay. So if we are wrong, that means that your wave 5 would have ended here and you're going to get a correction for downside. But we're looking at this move here for upside. Okay. It's good to have an alternative count so that when circumstances change or structures change, you always have a backup plan. Okay. So 4, 5 internally. See, there's a difference between this red degree and the yellow degree. The yellow degree is the higher degree. Okay. That is why we were expecting a deeper correction there. So let's look at this deeper correction and how it's playing out so far. Okay, we're still on the 4 hour. I'm gonna look at it on the 4 hour. Let me show the labeling for the benefit of those that are interested in it. Okay, so this is what it looks like. I hope the chart is not too cluttered. So that's the structure. As you're just gonna show the structure that we looked at. This was the 1, 2, 3 wave pullback, which we are now calling a W in blue. And then there's let's do that in red. Connector X in blue, which is a 3-wave move. Okay. And then the last move that we were looking for, if you remember the video that I did on how to trade WXY like a pro, please do yourself a favor and watch that video. Then you'll know how to trade WXY. Right, so this is the first move of the second correction. So the first move of a second correction ends at the 618 extension. Okay, extension of the move from here to there and then back to the end of this correction. Okay, so you can see exactly at the 6-1 it bounces. So we knew that was going to happen, and we actually traded this move to the upside. Okay, and now from the past 2 weeks we've been trading this move to the downside. We got all of those pips there. We got all of this from here, and I'm going to show you how we traded this. That's about 300 pips. Let me show you from our Slack group. We use a Slack group. This This app is very user friendly, and everything is very well organized. So let's just go to Euro US dollar analysis before we wrap up there. So Euro, so as you can see here, each and every pair has got its own specific channel, unlike most of these Telegram groups where all the charters are just dumped into one group and you can't even follow up. So here everything is organized. You don't miss anything. If you're interested in only specific pairs, you only focus on that, and then you see what members are discussing about that specific pair only. Right, so you can see here AUDCAD, AUDCHF, Euro US dollar, Euro GBP. If you're only interested in that, you go into that channel and you see what the ideas are. There's also my channel there where I put in trade setups, called trade setups. That's where I put all my ideas and my trade setups. Okay, so this is what we have on Euro US. So you can see that's the exact same analysis that we were looking at, and we were looking at this to complete this last piece here. Okay, and last week I think we even projected the blue box. So here there was that 61, and now we traded this last move here. So we need to see if we start getting that reversal. See how perfect this is. Easy 300 pips, easy 200 pips here, because you could see the structure. Even if we know that these are not going to be long-term moves, we could trade them. Okay, so let's go back to our chart. So what are we looking at? We've got the blue box projected. Look how this reverses exactly inside the blue box. Let me just delete it so you can see, or just move it a bit out. Right in the blue box, inside the blue box. We projected this last week. It starts reversing. But that doesn't mean anything as yet until you get a correction like this for a move to the upside. So that's what we're going to be looking at. And typically what they like to do is push it up, push it down one more before it goes, but it will still be within this blue box. Okay. So any correction here in the Euro US dollar pair, you take it for a buy. If it gives you a correction, this is the 4 hour. So let's look at the 1 hour. So the 1 hour is even clearer. You've got an impulse there. Absolutely, as seems blue box magic. So we've got the impulse on the 1 hour. Impulse on the 1 hour. So you want to get a correction. Even if it's something like this, it's okay. Even if it's something like this, it's okay. You can get that correction. If you do not get that correction, you don't enter the trade. That's how it works, right? So that's what you're going to be looking at, the Euro US dollar. All right, so let's run through the rest. I know I spent a bit of time on Euro US dollar because it's most traded currency and a very interesting currency. All right, so let's carry on. Pound US dollar. Pound US dollar, let's go daily first. Let's switch everything off and show you the structure that I've been showing for the last couple of weeks. So here we're looking at this as a 1, 2, not like that. We're looking at this correction. The whole thing is a correction actually. We know it's a correction. So that's why we do not put in 1, 2, 3 there, because there's no 1, 2, 3. You don't put things that are not there, because otherwise then you're forcing. And what's the point of forcing or trading things that you're not 100% sure of? If you are trading real money, then it means that you just want to throw your money away. So you don't do that. Make sure that your strategy is solid. You trust it with your money. That's what essentially we are doing here. You're trusting your money with your strategy. How effective is your strategy that you can trust it with the money in your account? So this is what we're looking at. We're looking at the first move as a 3 waves, W with the interconnector, X, and then the last one with the zigzag. So what we looked at last week was whether this was all the correction and we're going to get a Z move. A Z move. But this Z move, we know that it should be similar in size as the W, as the Y. Okay, so we could see, we saw that it did not happen like that. So this was not all of the correction. So the whole correction looks like it's going to be this one now. So when it tagged here, which was what we were expecting, when it tagged and it came down here, that's what we were looking for, right? So now we are a couple about 400 pips down from where we sold 2 weeks ago. That was the analysis that we analyzed here. So what does this mean? It means then that our X that we thought that we had an option of putting it there is not necessarily there, it's rather here. So it's a possibility that this will now tag here and we get another three-wave move. It does not have to be zigzag, remember, it can be any three-wave move and then a Z. And after that, then your correction will be complete. After that, your correction is complete and you're gonna be looking for a move back down here. Right now, this does not look like the move that's gonna come all the way down here as yet. We may get a Z, but if we don't, the next move is right down here. So what do we need to look out for in the next coming week? So okay, just to show you the labeling, I'm gonna show it quickly. You can take a screenshot and have a look at what I'm looking at here. Okay, this is not a secret. See, the charts are labeled clearly, and the labeling helps you to relate all the degrees in all the time frames. That's what essentially it's all about. So here when I'm just drawing up the pattern, I'm just showing you patterns in 1 degree. So if you label, you can have 3 different degrees in one screen. Okay, so basically you can have 3 different time frames in one screen. 4 hour. Okay, you can see there's another blue box there. I'm expecting this to bounce in here before we get another move to the upside. So that X that I had in yellow is this one actually. So we're expecting a bounce in this area. Okay, but we do not buy it blindly just because it's the blue box. We need to wait for confirmation. We wait for confirmation according to our strategy. All right, so we're gonna need to see, it has not really touched, it's missing it by a few pips. But what we are seeing here is that this pattern could be a regular flat. And if it's a regular flat, then it will complete right here in the blue box. Okay, beautiful. Actually, this is not going to be a WXY, it is rather an ABC in yellow. Let's put in that ABC in yellow. Do it correctly because the structure is at ABC. It is a single flat correction. It's not a combination. This is not a combination like on Euro US dollar. So we leave this one as ABC. Okay, we're not going to go into the details of what the difference between a single flat correction and the combination flat correction looks like. Right, so this is what we have. An ABC move, and at the C, we're going to be looking for a reaction there. Very nice. Perfect analysis. Easy money. Sometimes. Sometimes it's easy money. Obviously, it's not always easy. Right, so let's look at a US dollar CAD. US dollar CAD, another one of my favorite pairs. All right, so what are we looking at here? Okay, if I just look at the last piece here, so just another thing about labeling. So if you're labeling different time frames, you don't have to put in all your letters in one time frame. You'll see if as I go down lower, then the details becomes even more. So what are we looking at here? What we are looking for here is this last 3-wave move here, and now we're getting this one here, and we're looking for this correction here, which is the X wave, and we're going to be looking for this to go and retest the top there. So you wait for this correction to complete and take it back up. That's US dollar CAD. Okay, if you remember, we traded this here, 1, 2, and this one was perfectly within the blue box, not a peep higher or lower than the blue box, touches and reverses, and we got this move. Okay, we actually thought this was going to go all the way here, but it doesn't change anything. The structure still remains. So what we are going to be looking at here is for this to complete a 3-wave move like this, a 3-wave pattern, something like this. Okay, so let's wait for it to retest. That's the trade for the next week. Then we'll update what happens the following week. Okay, so for now, we're looking for the next move, which is going to be upside. Let's go closer on the 1 hour and see what is happening here. 1 hour. One hour, You can see here, you're making this correction here. This should actually sit here. So if you get a reaction here, correction in the 1 hour, you go. Actually, what you can do here is trade above this correction. Okay, not a trading signal. I don't do signals. I give you my view. You decide based on your own strategy how you want to trade this. So that's what I'll be looking at. That's per US dollar CAD. Now looking at Audi US dollar. Audi US dollar is very interesting in that it's got two alternatives that are both very strong, both very possible. Okay, so if you're looking at this as a diagonal, it's a perfect structure, because that will be something like this: 1, 2 here, your 3, your 4 will tick all the boxes, and then you're going to be looking for the last move 5 to complete that diagonal. From the 5, then you're going to expect a reaction there. Let's switch everything off there so we can just be left with this. So this is your diagonal. Let's do that in blue. You can see your diagonal, and this diagonal ticks all the boxes. Ticks all the boxes. And now if you put in numbers there, it's 1, 2, 3, 4, 5. Okay. And as you can see, the diagonal has got 3 waves all over, 3 waves in wave 3 as well, 3 waves in wave 4, ticks all the boxes, an impulsive wave 1, 5 waves in wave 1. It's all boxes ticked in terms of that. Okay. And then you also have this one where you can look at this as a, this one actually, it's not really the right one, although the bias will be right. W, X, Y, X, Z, giving you this this one. The reason why I'm saying this one is not quite right is because this W will not be a 3-wave move. It looks like an impulsive wave. So it cannot be a W, it would rather be an A. Okay, so, but for this to be corrective, to have a corrective labeling, this is what it will need to look like. Look like that. Okay. That's what it will look like. And then your Z will have another 3 waves. So you can see that both biases, both analysis are pretty valid and giving us the same bias. Right, so maybe if you look at the lower time frame, this may give you a 3-wave structure, but for now it looks impulsive, and according to the impulsive rule, this qualifies to be an impulsive wave. So a WXY XZ may not be the right one, but rather the diagonal. So we look at the diagonal. So what do we need to look out for? We need to look out for these to break out of here. Let's go 4 hour. You're going to be looking for these to get out of this channel, which we're still looking as a V pattern. If you get an impulse and a correction, then we're going to get this move. Maybe even come and retest the top there. So this makes sense in terms of correlation with the Euro US dollar. We're expecting a reaction at the bottom for this one as well. Okay, so let's wait for that reaction. If it happens, we already have a reaction on Euro US dollar, so we're just waiting for the correction. Same here, it looks like you've got a bit of a reversal, but not very convincing. Okay, not very convincing on the 1 hour, but the confirmation will be a corrective structure there for upside. Okay, and then New Zealand played out exactly as we have been looking at 4 hour. Same as the rest, we're still busy with this correction. 1, 2, 3. We looked at this as a 1, 2, 3 expanding flat, and we actually wanted to get a 3-wave move here, but this one looks very impulsive. Okay, but that's still okay, still within the structure. Okay, so are we gonna get a reaction here? And is this complete? We need to get confirmation. Okay, so this reaction, so this impulse moves to the upside don't mean anything yet until the cycle is completed for indication of the upside. Otherwise, this could even give you a V pattern here before it reverses. Okay, so that's New Zealand, Audi we've done. Looking at US dollar ZAR, this one has been quite interesting. You remember from right at the bottom here, we took it right at the bottom here, and we were looking at this as an impulse. We got the correction, which was 1, 2, 3, and we only expected up to 1230. 1230 has been crushed and passed, right? But that's fine. So that's what we got. So now it is giving a 3-wave pullback. It may give another one for the move to the upside. So why are we looking at this structure? Because there are 2 possibilities in the high time frame that we are looking at here. Just so that quickly, we're looking at let's do it with straight lines. I'm going to do it with yellow. Looking at this as the first move and the correction, and we're looking at this one here to come and give us a zigzag if that is the move that we're going to get. Okay, I'm out of space, but actually the forecast here is around the 9 ZAR area, 9 ZAR to the dollar. Okay, if you look at the lower degree, you can see it fits snugly, not like that, fits snugly there, your correction in the middle, and there, and then you get this one in here, which should still be red, 1, 2, 1, 2, mouse piece behaving. Let's get the mouse to behave. 1, 2, 3, and then what are we anticipating here? We expect a 3-wave move, okay? Something like that, right? But this does not have to be a single pullback, single wave pullback. It can do this, okay? Can do this before we go and complete the last one. Now, that's not only the only option. Also, the other option will be this one. And we need to anticipate both these options so that whichever one plays out, we know how to trade it. Where you get a correction here, this goes back and retests there, comes back with another move. And all of that will still be a 1, 2, 3 wave move, which gives you a W in the first wave, a X there, and then a Y. And then you're going to expect a reaction in the Y. So this is the only move that will disqualify the buyers for 9 ZAR. Okay, so if it's giving us a flat correction, it will not necessarily go down to the 9 ZAR area. Okay, but if this plays out as a zigzag, same way as this one, then that is what we're going to be looking at. But right now we've got this nice reversal, get a correction, we retest the previous high. So that's the daily. So let's go to the 1 hour and see what is happening currently. Okay, so right now you've got an impulsive move up. It's 1 hour. So on the 1 hour, you've got this 3-wave pullback. With a 3-wave pullback, you may get a reaction there, something like that, before we go. Okay, so just notice that that 3-wave pullback has happened here as well. 3-wave pullback, zigzag, and there we go. So same thing could happen here. So this does not mean this is going down. It's only a pullback at this stage. All right. Now looking at the yen pairs, US dollar JPY. US dollar JPY, I have to show you the previous analysis that was done over almost a year ago. So this US dollar JPY, 7 August last year. That's almost 9 months from the analysis. So if you can see here, Lost it here now. Just want to show you. Yeah, here we go. So you can see that the analysis here, I'll show you where we were exactly before we did this. Let's just go a few seconds back. So you can see that we were looking for this to come back down here around the 104 area, even when we were still here. We were only looking to sell this to the downside to 104. And when it gets here, this is the structure that we were looking at. Okay, so obviously there, what it did was give us an even more structure with a complex B in here, but it didn't change anything. You can see there. Okay, let me just take off what I'm doing now. So this is what we're looking at. For it to come back down, if it's going to be only a 3-wave move, and then get a reaction there. This was 8 months ago. 8 months ago, and it's still valid today. Okay, let's go to it daily. See how amazing this analysis is. If you saw where that video was, it was here. And we were trying to sell to come down to this area. And that's what happened. Why? Because you can clearly see that we had a move down. At that stage, the correction was only this one, actually. It was only this one. But we could see that we may get a complex B correction like it has played. So that's why after that one played out, we were not looking to take it up because it would not make structural sense to buy this at that area. So we knew that we were going to get a move to the downside, completing this nice WXY. Perfect. Now we've got the reaction there. Okay. If you look at the blue box here, do I have it projected? This is right in the blue box area. Let's see. Fibonacci extension. Take it down. Actually, here it misses it by a few pips. So this would be your blue box area here. But that's okay. Just a few pips. And now what we're going to be looking at, it looks like this move has now started to the upside. And if you check something here, how this move starts here, starts sharply, and then gets a reaction. It starts sharply, we may get a reaction before we start going. And if we get this reaction here, then we are taking it all the way up. Okay. If I remember correctly, this move was due to the elections in the US, the elections that Trump won. I can't remember exactly. I think that must have been that spike where the market was going down like that, and then we went up with a spike, and that spike is part of the price market data. So now we've started this impulsive move up, and as you can see last week, as we said last week, we were forecasting it as a leading diagonal. Okay, so now we're looking for this to go for a yellow wave 3. So any correction here, we'll keep an eye on it for a move up. So let's keep an eye. So this correction may do something like this first before it goes. Either way, we are looking for upside on this one. All right, so that's US dollar JPY. Euro. Okay, Euro. We were looking for this to complete this structure. This one here. 1, 2, 3. Something like this. And it was perfect, still perfect, because that last C leg was ending with a V pattern like that, and you can see it broke to the downside. So what do we need to do here? What we need to do here is to wait for a correction and take EURJPY to the downside. Okay, take it down. Wait for a flag. And to show you again why we're looking at it like that. I'm still looking for this structure. The bigger structure is still this one here. Impulse, correction, impulse, correction, and that correction needs to be similar to that one. Similar only in terms of structure, which means I only want it to be 3 waves. Even if it's not the same correction, it's irrelevant. Even if it gives me, here you see I've got a flat correction. Even if it gives me this one, it's still okay. Doesn't matter, doesn't change anything, doesn't change the structure. Okay, so that's what we're looking at. So we've broken down, look for cells. And you only sell when it gives you a confirmation. We're looking for cells. Don't rush it. Chief. Chief has played out the structure that we looked for 3 weeks back. We wanted it to come and take this top. Actually broke it, making it a zigzag, and you can see this is why we want those structures to complete. So this could give you continuation to the downside. Continuation to the downside. So you just need to see if you get a flag here, then you take it down. Unless it is making a 1, 2, 3, 1, 2, 3 impulse, then that will give you a regular flat because it is right now at the critical area. Okay, it is right here at the critical area. Let's look and see if there's any reaction here. And we're actually on the 1 hour, so there isn't much of a reaction. It's correction, so it means you may get one more down here. Still want to push lower. So keep an eye on this one. Trade it when it comes, when it goes down, you're gonna get one more, but you may get that other one as well. All right, so that's CHFJPY, CADJPY. So CADJPY is interesting. We had this pulsing move from right here at the bottom, we had this one here. Okay, so when we had this reaction here, I remember that was 2-3 weeks back when we said we are going to trade these pieces on all the yen pairs, and this piece must just be the same size as this. And that's what we got. It was actually slow, not a very good trade because it moves, retraces, moves, retraces. So this one here, it looks like it's doing something like this, comes back and retest the top, come back down and go, and that will be a nice regular flat. So that's what we're going to be looking at on CADJPY. You've got an impulse. This is not going down, it's correcting sideways. So it's flat correction. When it completes, takes here, look for it for upside. All right. Very interesting. Just look at the 1 hour. See what structure we're getting. So on the 1 hour, it may still give us another one down. Like this. 1, 2. Show you there. There's this correction here. So it may give you this one before it goes. Okay. It needs to retest there. Right. And then you'll expect that kind of reaction. All right, so that's CAD, Audi. Audi also had this move to the upside. We had that one, and we had this one here. And the question now is whether this is building a V pattern, or if it's building a V pattern, you're gonna wait for this to correct outside to go back and retest. If it is a correction, then a correction will need to tag here, break this first, or come as close as this first for a reaction lower. So if that does not happen, then we're not going down. Okay, so that's what you're going to be looking at here. Look for correction here to get this 3-wave move and wait for a reaction. Okay, that's Audi, New Zealand, similar. And New Zealand seems like it wants to get a move to the upside because you're getting that reaction and you're getting divergence as well. There's your divergence. So from here, New Zealand JPY has been on a downtrend, but your indicator has been on an uptrend already. So this is what we call a lead, an indicator that leads, right? So if you use it correctly, then you can use it in a leading fashion. All right, so we're gonna wait for some kind of reaction here for upside. Okay, that's all the yen pairs. Now let's look at the rest of the pound pairs. Start with pound yen. So pound yen. If I go to the daily, the reason and how we're looking at this is this diagonal like that. This looking like a 1, 2, 3, 4, and then expecting a 5 here. Okay. Let's just fix that. So all of these may be in A. Let's just draw it cleanly. This diagonal there. 1, 2, 3, 4. So we should possibly get a 1 more here. Okay, if that's a diagonal. Okay, let's go to this last piece and see if what we're gonna get there. See if we're gonna get this last move of 5. Right, but what's important to note here is that this wave 5 cannot be longer than wave 3, and wave 3 is this one. Okay, let's look at that last piece there. 4 hour. Okay. So this is what I showed last week with this one. It was very interesting. What we saw last week was that we had this move breaking out of that diagonal, coming down like that. It's a WXY, switch off the labeling. And when it made this 3-wave pullback, I'm repeating what I did last week. When it made this 3-wave pullback, I was expecting that we're going to get a move further down because it would have corrected this move. But instead of giving us that and a move down, okay, we got this WXY here. But it did not go. So why didn't it go? It didn't go because it was simply making a higher degree. And now your Y becomes this 3-wave structure like that. After completing the Y, then it still doesn't go as you want. Why? And because it was simply making this one a WXY. So you can see the smaller degrees build up to form larger ones. So after the Y, we're still selling as well. Okay, we're still selling this one together with the pound US dollar pair. Then eventually we get a move to the downside, and this is now broken out of the channel. So what we're going to need to here is this may carry on down like that and give a 3-wave pullback like that, but we're going to take it back to this level. You must just be careful because this may be a very corrective move here. If this is a W, this may be a very corrective move. If this is your W and this W is representing this 1, 2, 3, then this will be an X, and we know X are corrective structures. So this may be a very corrective structure here. Okay, so even if you know the direction, this may take you through a roller coaster of emotion. So what do we need to do here? We wait for flex. We may not give them immediately, may push down a bit more first before we get the reaction that we're looking at. Okay, so that's pound, pound JPY, and we look at pound CAD. Pound CAD, we are looking at this structure. One correction here, which we looked as a running flat, and we're expecting this. Go watch the last couple of weeks analysis. This is what we're looking at for it to complete this WX. Why? Simple like that. Okay, if you look internally here, you've got also 1, 2, 3 simpler structures. Here you've got 1, 2, 3 as well. So this Y actually may be around here somewhere. So you may start getting a reaction there. So that's what you're looking at with the pound, to get a reaction higher. Okay. Now it looks all cluttered. So if you need to take a trade here, you're going to need to wait for an impulse to move to the upside to get a flag. Take it up. That's pound CAD, pound chief. So you can see that structure on pound chief is similar to what you have on pound JPY. So this may just be a 3-wave pullback for a further move to the upside. If you remember pound chief, we're comparing pound chief with New Zealand US dollar. Watch last week's video. Just go and click on pound chief, and you'll see that comparison. Very interesting. So with pound chief, we're actually expecting a sharp move to the downside before a last reaction higher, like that. Right now, this is what you need to wait for. This to complete, get a reaction flag, take it up. It's pound chief, pound CAD we've done. Pound AUD, pound AUD. So pound AUD, if you remember, we looked at a structure like this, 1, 2, 3, 1, 2, 3, and we were expecting this to give us a last 1, 2, 3 like that. Okay, has the structure changed because we did not get a 1, 2, 3 like that, and then we start expecting a move to the upside? It has not changed at all. It's just the type of 3-wave structure that you got. Instead of getting the zigzag like that, you got a flat correction, which means that this one now retraced deeper and come back down. So your analysis, your structure, and your sequence is still WXY, where you get a 3-wave in W, a 3-wave in X, and a 3-wave in Y. Now the 3-wave in Y has completed. Okay, I actually bought here. Thinking that we are now going up, and that this was our Y that it completed there. Okay, but obviously had to take a break-even trade because of this move. But that's fine. We're gonna attempt this one again if it gives us a reaction to the upside. Very nice. Okay, so that's pound AUD. That's what you're gonna be looking at on pound AUD. Pound New Zealand. Loading pound New Zealand. So pound New Zealand is a very nice one. If I show you the swing on the 4-hour with all the labelings, you'll see that this one was simply doing we've got a passing move 1, 2, 3, 4, 5. And this passing move looks like this, an impulse and a correction. Okay, and we were looking for that to give us a 1, 2, 3, 4, happened with a complex P correction there, 5 in red, we got our 3, and then our 4, and then our 5. So our sequence was complete. So we needed to get a correction. Was this all of the correction that we were looking for? We were looking for only that. but you can see that this is making a complex one here. So after that, we actually were expecting this to come back and retest the top. It came very close before it came coming down. Okay, but we can take that as the reversal point. And now start looking for flex for downside. Why would we look for downside? Because this is the structure that we're going to be looking at. Let's do that. The structure that we're going to be looking at is this one. I've already projected this to come and retest the bottom there before we get a move higher. Okay, so wait for flex here. Could be an interesting one. Now look at the euro pairs. We'll start with euro pound. So we'll start the euros and complete the pound. Got both of those currencies there. This one you should have taken 2 weeks back, because we had a nice reaction there. And during the webinar, we said buy the breakout of the flag. Look what has happened now. And why are we looking at it like that anyway? It's because we had the impulsive move down, but I was looking for it to correct and then carry on with the move down. But instead, it gave us this V pattern here. Let's switch it off. So we're looking at this now as a V pattern. Something like that. So this, if it's going to carry on with the move up, it needs to give us a 3-wave pullback and break out. And if it breaks out, then we're going to wait for another correction and take it back to the previous high. It will be very interesting to watch how this plays out. Okay, if you're in this trade and you took it at the bottom, you want to move your stop to break even. Move your stop to break even or take half profits. Okay, so that's euro, pound. EURCAD, I like this pair, you know, and the pairs I like them because they've got clearer structures. Let's go back to the daily and show why EURCAD what we're looking at with the EURCAD structure. So just looking at the last piece on the daily, this is what we looked at. 1, 2, 3 pullback, and then this move to the upside. And we've been trading this move here. We've been trading this from this correction, all of this move. And that move alone is over 800 pips. So we kept buying until it tagged. We wanted it to just tag the top. Look what happens, it takes the top and gives us a reversal. Okay, so that reversal now is playing out as an impulse. It looks impulsive. Is it convincing? It looks pretty convincing, but this will confirm it. If we get a clear corrective structure here, it will confirm that downside. Minimum at least to the 61 area until we see if we get a reaction or another one back down. Either way, so we're going to be waiting for a correction here. It has not played out yet. May take a while. Let's go for hour and see. In the 4 hour and see how this correction is playing out. So this there, 1, 2, 3 waves, 1, 2, 3 waves, possibly. Okay, we've got only with this one. So I'm thinking this one, maybe even this one giving us a regular flat for another move like that. Then that will be a nice 3-wave down, and then you'll expect a 3-wave pullback for downside. Okay, so that's EURCAD, Euro New Zealand. So there's something very interesting about Euro New Zealand and structure. You know, these types of structures interest me, where you could not see any other alternative, and the market actually goes and gives you that one. I was only seeing this. This is what I was seeing. I was seeing this as a first 3-wave move, and I was looking for this to just give us a 3-wave pullback. It looked perfect, and we're even trading this one to the downside. We're selling, okay? But then this just changed and gave us an impulsive move up. How did this impulsive move change the structure? Okay, here's how it changed it, because we were looking at this. I was looking at this, so let me show you with the blue or even the arrow. I was looking at this to do 1, 2, 3. But now instead of completing with the 3, it just makes an impulsive move up. look how interesting this, and what the structure, the new structure that it formed. Instead of that move to the downside, we had a three-wave move. Watch. We had that three-wave move. It was not actually a three-wave move. We actually built a regular flat, expanding a regular flat in the middle. And now this becomes a three-wave move. Still the same structure. It's just the pattern did not play out, or we did not anticipate that it would play out in this way. Okay, so this structure in the lower degree is a W, X, Y. Very interesting. Okay, and the overall structure is this one, the yellow one, which is W, and then an X. And then you expect that that move that we're looking for here, we're still looking for it. It was just not ready. But we did get a couple of pips here until it reversed. So that's the move that we're looking at. So how will this now look like? It will look like this structure here, like that. Okay, nothing has changed. The structure remains intact. The sequence still intact. Okay, so everything is still valid here. Okay, it's all still valid. All right, so what are we looking for now? We are now going to look for any corrective structure. As I always say, an impulse down doesn't mean anything. You need to get a correction, a clear correction that opposes that move for further move to the downside. Okay, that's Euro New Zealand, very interesting one. EUROAUD, EUROAUD. Keep saying that we do not sell EUROAUD as yet. So what did we look at a couple of weeks, 2 weeks back? We looked at this structure. Let's do it with yellow. You looked at 1, 2, 3, right? And I said any corrective structure on EUROAUD is an opportunity to buy. It gave us the three waves. Okay, gave us an impulse. When it gave us this correction, it was an opportunity to ride on. Now it's moving back down here, and I'll show you what the structure that I'm thinking it wants to do here. All right, so we've got the three-wave pullback. Just show you the lower degree. It's 1, 2, 3 there. 1, 2, 3. 1, 2, 3. See how perfect this is. This labelings comes secondary once you've identified the structure. Okay, so here instead of going like that, it gives us a pullback here. So this is what I think. I think this will give us a 1, 2, 3 move there. Goes back and retests the top, giving us this move. Giving us this one. Okay, so this will be a big corrective structure, which could possibly even come back down, and then we go. So all of that this will be doing is build a correction. Okay. All that we'll be doing will be building this bigger correction. And if it builds a bigger one, you know how this pair flies once the correction is done. Okay. Short term, you can take a small trade up to this level if it breaks to the downside. But otherwise, this can just keep crawling down here. Keep crawling down like that. Okay. So that's EUROAUD. Not really much of any new trade there. Okay. EUROCHF. EUROCHF still has a long way to go. Okay. So 6 weeks back, if you go watch the videos that I did 6 weeks back, you should have been buying here. Because during the webinar, we were here and this was nicely out of here, and we said we need to buy this, put a stop loss, take it all the way up. But I did not say, my target was not here, my target was only here. My target was only here. But it has now broken and beyond. I was looking only at this level because I thought after this it was going to react and give us a one more up. Okay, but if you look at the higher time frame, it is clear what this pair is doing. Very clear. Let's see here. Look at this. You just won't see it if you do not have the right experience. This move is up in 3 waves, pulls back 3 waves. So what we would expect is for this move that starts here to go back and at least retest the top if it's going to be a regular flat. Down here, it has broken. It can break slightly. It can break slightly when it gets to that level and give us another one to the downside. So what we are looking for here is every corrective structure, we're taking it back to that level. Similar to EURAUD, we're just going to be buying EURCHF up to that level. So there's still a lot of upside left on this one. So if we go to the 4-hour and see if we get any indication of corrective structure. We have currently one that looks a little bit complex on the 4-hour. And this is how it looks. You had a move down. And this move down is in 3 waves. Now you're looking at this one here. Okay, so if this is the case, then this middle one here could be a complex, can make a complex B correction there, and this one, and you'll see that it will be a nice corrective structure to buy, and that's what we're looking for. We're looking at this nice big one, something like this, we buy, something like that, we buy, because we're only looking for nice corrective structures with the right size for upside. And you saw how far the upside is, still 1,000 pips away. Okay, so if you get this opportunity here, we're on the 4-hour, so you need to wait for the flag on the 1-hour. Gives you this. It may clear this. It may clear it. But otherwise, we are bullish EURCHF. All right. So the euros. Did I miss any euro pair? If there's any pair that I missed from the dollar pairs, the yen pairs, the pound pairs, the euro pairs, just let me know, please. Oh, US dollar chief. US dollar chief. Thank you. So US dollar chief has got the same structure as US dollar JPY. Starting with a leading diagonal there. Leading diagonal, so we expect this to go to wave 3. Not at the blue box, wave 3. And the wave 3 around this area. We are close now, around 1. So here may just be a corrective structure, similar to what US dollar JPY will be doing. Okay, so we're looking for that to that level. Okay, initially this looked corrective, and we're expecting it to carry on with the move down. The structure changed, then we adjusted like that. That's fine. All right. Okay, so those are still coming. We still have to do gold and silver. Okay, but before I start with the CAD pairs, let's do gold, silver, and gold. Gold first. Thanks, Ahmed. So this is the structure that we're looking at on gold, similar to Euro US dollar, just a slight difference. Okay, so we still have the parabolic move. We've got a 3-wave pullback. Okay, and after the 3-wave pullback, you get another 3-wave move in the same direction as the trend. So we were looking at this in our group as a expanding flat after it tagged the top. We're looking for this to make an expansion right to the bottom. So when it was correcting here, we're taking this trade to the downside. Why? Because we wanted this move to the downside. And you'll see that this move, if it plays out the way I've drawn it, will be an expanding flat. Something like that, something like that. Okay, we don't know this length as yet, right? So what would be happening here, if I just switch off the labeling, this will be a W, X, Y, which means a regular flat and expanding flat in combination, and then we're going to expect a move to the upside. Okay, easy like that. So looks like you're starting a V pattern here. Gonna watch it as it goes. Break, correction, we're taking gold up. Okay, so it seems like those structures that we've been waiting for a while are now almost complete. So we're now just waiting for confirmations. Okay, so if you just go to the daily, show you the overall structure on gold and maybe the labeling on this, if somebody is interested in that. Right, so it's clear like that. Let's just adjust here. This is W, here, X, Y. So this structure, I looked at it from last year as well. So we looked at this as a 1, 2, 3. And the target for this swing we got. So after this, we thought it was going to make a reaction lower, but instead it does this. After doing that, what it is essentially doing here, and this is what we expect. That's why we've been forecasting this correction. We're expecting this move. You see here, we're forecasting this one based on this structure here. It was corrective, and we were looking for another corrective structure here. Looks like it is complete, but we will need to get that confirmation that this is complete so that we can get one more up to complete this sequence. And this sequence will be very simple because what it will be is this. Let's do this in blue. A 1, 2, 3 wave move, just like that. Okay. This is actually the wrong degree. It should be red minor. Red minor. Okay. So we've built our X. So you see how corrective the X's are. This is your X. This is your X. This whole thing is an X. So the X corrections are very corrective. Okay, so we're waiting for a reaction here. Let's look in the 1 hour time frame, see if we've got any kind of an impulse or reaction higher. Okay. No confirmation yet. You've got to move up, which does not mean anything. It will mean something if it completes the cycle. So if it does that, then you're taking it up. You can see here you're getting this slowing down pattern here, V pattern here. Take it up. Okay. Silver. Silver, 1 hour, you're getting a V pattern there. So expect a reaction higher on silver as well. Pull back, we take it up. All right. Easy. Let's look at Audi New Zealand. Audi New Zealand. Let's go for hour. And I'm going to switch off the pattern there. So Audi New Zealand, we looked at this structure like that. See? Correction in the middle. And the last move to the downside. If you look at the lower degree, something like this. 1, 2, 3. 1, 2, 3. 1, 2, 3. Perfect. Everything aligns, and your labeling here is 3 waves, 3 waves, 3 waves, and then this goes. So we need to see if this can go all the way, at least minimum to the 61% where we're going to start seeing a reaction. Okay, and then eventually we should go back and retest the previous high at around 130. Okay, don't quote these figures. They are not that, you cannot focus it like that. So it's just around that area for now. Until we get a correction here, then we can project the target. We can actually project the target from here. Okay, so that's where the 130 area is. Keep an eye, look for the correction. How's that correction playing out? Did I check it? Let me just go one more, check it. And the 1 hour looks pretty interesting. because you're not getting this three-wave pullback, and that's what you want for continuation. You're just going to be taking it up. And another confirmation on this pair is that Gartley pattern that I had switched off. As you can see, most of us in the group bought it right on the 88, touched the 88, and now we are holding for more. Okay. So we only use advanced patterns or harmonics after understanding our structure and the sequence. Okay, so we'll look for continuation. Maybe even better will be when this clears this channel. Then you know that we're gonna retest the previous high at that level. Interesting one. Okay. AUDCAD. AUDCAD, we said last week, look for this area. That's all you need to do. You just need to target this level. Entry point, flex, take it to that level, then we'll update it. Okay, New Zealand CAD. Okay, let's look at New Zealand CAD. So New Zealand CAD, I have to show you the daily first. And see what we're looking at. So that's the whole structure on the New Zealand CAD that we're looking at. You get the start of the swing coming there, deep correction there, and we're expecting that we're going to have the same correction, similar structure as we had here before. And as you can see, this has already started the same move, right? So look on this side and you look at the red degree. So on the red degree, you've got something like this. It's similar to this one, but only that this one corrects right here in the middle. This correction is relative to this swing, and then you get another three waves like that. Okay, this will obviously be the red degree, so it's three waves there. So under the red degree is the blue degree, or rather the green degree. Let's do the green, show it. 1, 2, so 1, 2, 3 green, 1, 2, 3, okay? And every time you get a red, you are getting a lower degree in green, WXY. Okay, similarly here, you'll have this 1, 2, 3, you'll have the 1, 2, 3, like that. Okay, so as you can see here, we also have the lower blue degree, and that blue degree is 1 degree lower than the green, which means under the green, you're going to have all these blue WXYs, three waves, 1, 2, 3. And so it goes for all the green swings, okay? So now, here we built this one from top to bottom. We started with the higher degree W. Why did we start from top to bottom? Because we already have the information. Okay, it's already completed, it's done. But did it start here at the top? It didn't start there at the top, it started at the bottom. It built until it became larger, all these smaller degrees building up the bigger W. So if we're gonna start this here, where do we start? We start with the smallest degree that we looked at. So here we had the blue degree, and now we start with the blue degree. What is the blue degree building? It is building the W, okay? It's building the W. So if it's building the W, then it means it is building the green. What does the green build? The green builds the red. So it means your WXY in green will be completing this red one, like this. That is the red. Let's take off this one so we know where we're going. All right, so, but we know that the green always has the blue underneath, the blue degree lower. So we've got this one, the blue, so you can have a blue degree under. Here we've got a blue degree under. Okay, so look at the size of this blue degree here, because that is the same size that we're looking at on this X. So I'm going to switch everything off. You can see all the labeling, you can see all the structures on the screen. I'm going to switch it off and now look at this blue X, which I want it to be similar in degree as this one. Okay, let's go. 4 hour, we're just looking at this WX now. We're actually looking at this as a V pattern. Doesn't look like it's a V pattern anymore, but the structure is still giving us the right bias. So you see, when I go lower, we become more detailed. We look at even more detail. So here we're looking at this as a 1, 2, 3. So we're expecting that we may start to have a reaction higher here. So right here at the bottom, I'm going to go to the 1 hour. It looks like we've got an impulsive move up and then the correction. So we need to see if we're going to take it there. So let's look at the 1 hour. So in the 1 hour, if you look here, you've got a nice impulse and a corrective flag. So you can start taking this to upside. Okay, but preferably if it clears this level, if it clears that level, then you take it. Okay, that's New Zealand CAD, very interesting pair. Okay, so let's look at the indices and then the cryptos. Right, so the indices, looking at SPY, S&P 500. Okay, they're all doing the same thing, and this is we're just gonna run through them quickly. I'm not gonna do detailed analysis on this. So this is what you're gonna be looking at. We traded the upside after they broke out of these V patterns in 3 waves. Okay, now what is happening here is you're getting a 1, 2, 3 down. You're getting a 1. You're building a 2 here. 3 waves. Back to retest the top. That's what you're gonna be looking at. So possibly after that, it will give you 1 down, 1 down, and then higher. Okay, that's what you're going to be looking for. So your next move is this one. Then the NASDAQ, similar, 1, 2, 3 down, 1, you're building a 2, take it back up. Then you can have the same move as well, similar to that. That's the NASDAQ, the NIKKEI, wait for correction, for continuation. This one has got a slightly different structure to the others, but you can see that we also broke out of a V pattern here, which we saw quite early. And now you're getting this correction here. So any corrective flag like this, similar in size as this, you keep buying it. Buy and take profit, buy and take profit. Okay, that's the Nikkei and the DAX. DAX, similar 1, 2, 3, not like that. We also had a V pattern here, which we forecasted, broke out of the V. The V is a very prevalent and very accurate pattern here. So we're looking at this as a 1, 2, 3, 1, 2, 3, or if it does not give you this one, it means that this will clear the top like that, and this becomes 1, 2, 3. But I like it when it goes sideways. So it doesn't matter what I like. It's all about what the market gives us. Then it will be a better trade with higher probability if it does this one. Okay. Right, so that's all the indices. The cryptocurrencies, nothing has changed from the analysis that we did previously. I'm going to go back to the daily again. My view still has not changed. Let's switch off here. I'm sure you guys are getting tired of this. So this is what you do as a trader. You track all your pairs, the pairs that you trade, right? The frequency will depend on how fast the pair moves. So here I'm checking all of this because I'm doing these webinars with you guys every Sunday. So what we have here is excuse me. What we have is a three-wave move down. This is the three-wave move that we forecasted from here. We're expecting it to come back and retest the top here. So we'll see what happens when we get to this top. I do not see this continuing all the way up there. I see this giving us some kind of a reaction here. And this does not have to be a zigzag. It can be any corrective structure. It can be a flat correction like that. So maybe not even go to lose value completely, but it can go around this area. But we'll see what it gives us. But for now, this could be the move that we are looking at, and this will give us a zigzag in the higher degree. And that zigzag will look something like this: 1, 2, 3, and then we're back to square one. Okay, that's what the market is giving us now. If anything changes, we'll see. Litecoin, similar structure, exactly the same structure, no change there. Just looking for it to come back and retest the top. We'll see what happens there. If we get to the top, we get an impulse down. You get a correction, you're taking it down. Right now, you're taking every correction to the upside. That's your target to the top. Ethereum. Okay, so the difference between this one is and the others is that the others have already done this one here, and they are on this. This one only has this upside here. So, but similarly for correlation, it needs to go with the others. So we're gonna wait for correction and for a move to the upside. But it's not safe to trade this one. Rather Bitcoin or Litecoin are tradable, because this one may have reached the end. Expect a pullback, retest, and expect the same thing that would have happened with Litecoin and Bitcoin, even though this may have a bit of a delay. Okay, and lastly, Ripple. Ripple, remember we said Ripple had broken this this bottom here? It's the same structure as the rest, 1, 2, 3. And now we are building this one here. So this one had broken here, so we're expecting the others to come and break the bottom as well. So here it's correcting. If you're interested in the cryptos, wait for the corrections that they're busy making for this short move back to the previous highs, because after that you may get a reaction to the downside even more. Okay, that's all I had for you guys this week. Hope you guys enjoyed it. And good luck for next week. Trade safe. Please subscribe and like the videos. Cheers. Bye-bye.